Hello and welcome to our Future of Strategy Multilateral Thinking fireside chat today with Gabriel Buck and Louis Taylor. These are two people who have a vast amount of experience in export credit, SME, export financing, and the world of trade generally. Gabi is the founder of GKB Ventures, which is an award-winning consultancy and has 35 years of experience in investment and corporate banking. He's worked with Barclays and across a range of asset classes. Louis Taylor needs no introduction at all. He is the Chief Executive of UK Export Finance and is very heavily involved with funding and supporting SMEs, particularly at this moment of crisis through the pandemic. Guys, it's a really huge privilege to have you both with us today. And I really wanted you to give me an overview of how the export credit market has been working over the last few months, but also particularly over the last couple of years as well, in terms of competition from China, in terms of the weaponization of trade credit, we could say, and in particular, are you seeing changes and can we compete with the amounts of money that are going into Asian markets and particularly China?
Export credit agencies are fundamentally, certainly in OECD countries, their export credit agencies, they're fundamentally counter-cyclical organizations. And so actually the time when we get really, really busy is in a down cycle. So we are incredibly busy now, and I'm sure all my counterparties will be as well. At the same time, the last 2 years have not been idle prior to COVID at all. And the reason is that export credit agencies are there to fill in gaps in private sector provision of finance and insurance. And actually some gaps were created after the financial crisis by a change in regulation, and the export credit agencies have stepped into those gaps. I think particularly about the needs for long-dated financing of somewhat more risky projects in perhaps more risky jurisdictions as well. And that sort of lending had become disproportionately expensive for the banks, and capacity had shrunk. The export credit agencies moved in to deal with that. Now, because of COVID, I think that you've seen a range of responses from export credit agencies in different countries. Some countries have used export credit agencies as the major form of business support for domestic as well as export-oriented business. And I think perhaps an example of that sort of end of the spectrum might be SACE in Italy, where a lot of government schemes are running through SACE. Here in the UK, on the other hand, the Treasury has really focused UK export finance on its core business of exports. We've expanded our product range within that, but we are very much focused still on exports, and it's the British Business Bank domestically through which particularly SMEs, and particularly the S end of SMEs, have really been getting access to government finance. In terms of UKEF's product range and what we've done, we've just rolled out for large companies our Export Development Guarantee, which is big chunks of working capital for export-oriented companies domestically, but also our general export facility is about to be launched, which is the same thing for smaller companies, a general working capital facility, not just linked to a specific contract, but for the generality of an exporter's working capital needs. And we've been more flexible in many other ways that I'm sure we'll come to in other parts of the conversation. But I'll pause there and let Gabby get a word in edgeways.
I fully agree with Louis. I mean, one has to remember that the export credit agencies were set up in 1919, at the end, as part of the Treaty of Versailles, at the end of the Spanish flu pandemic. We have another crisis, and this is where they come to their fore, and this is why the ECAs are there. They truly are to support the trade through a counter-cyclical cycle. So fully agree with what Louis was saying. You asked a question about weaponization of trade in China. And that's quite interesting. I think trade is inextricably linked to foreign policy, sometimes overtly, sometimes more covertly. It's rarely about the equipment. It's about the sphere of influence. And I think when you've got an economic crisis like this, I think there's going to the behavior of export credit agencies around the globe, I think, will change. Two good examples of that is defense and trade sanctions. Defense is really about the kit, it's about the influence in a region or in a country. And trade sanctions, on the other hand, are purely to create a political disadvantage to the country in question. And I think, Rebecca, in one of your books, you highlight this quite eloquently. I think with China, China are often quoted as breaking the OECD rules and made out to be the bad boy of the ECA world. And even US Exim's advisory committee recently stated, and I quote, China's position as the world's largest ECA is a national security threat. And personally, I don't see that. I mean, I do see that China has significantly grown in the last 30 years. I mean, since the 1980s, its per capita income has grown 30 times. Despite COVID, the economy has grown 5% without having to increase its debt levels. It's got a very large trade surplus, which is using to invest in Africa and elsewhere. And they continuously do have significant volumes of the ECA market as a whole. And it's difficult to actually get the true figures, but the general synopsis is that, or acknowledgement in the market, about 50% of all ECA business done is Chinese. But my experience has been that the Chinese rarely do this below the OECD consensus. Some of the larger transactions I've personally been involved in, these are project finance. These are the normal terms and conditions that an export credit agency would do, just that the Chinese will go bigger and sometimes into markets where other ECAs will fear to tread. So yes, there's a shift. I think more of it, though, is about understanding the sentiment that the Chinese now are an important power globally, and their hard and soft power influence in the world has grown. And I think we, the West, are having to adjust. But, the main part of your question, this is front and center as to, the economic and political situation we have today makes the ECAs so important.
Yeah, I think, can I pick up a little bit more
sure.
on what Gabby said, particularly addressing the China question that you put to us. And I would agree totally with Gabby. I think there's a tendency to perhaps in some quarters to demonize China in a way that is perhaps a bit of a crude characterization. It's not that we don't have our trade issues with China and that we would like to see some of their business practices changed, but I think Gabby's right. It's not particularly in the area of subsidized finance that this is a real issue. In fact, I would argue that actually it's the industrial play from China that may be in a way mispriced relative to the financing being mispriced. I think there's also issues around transparency, and I would highlight that as being something that is of real concern to us. That one of the things that's made the OECD arrangement work so well is the transparency that there is between the OECD members' export credit agencies at a transaction level. So everybody can see the degree to which their support has been provided and the degree to which it is absolutely in line with the terms of the OECD arrangement. And that lack of transparency is quite tricky. But I think that, China, as Gabby has said, and we've all seen, has grown so much. In terms of being able to do bigger things than others and to do it where others fear to tread, I still think there is good financial capacity from OECD export credit agencies. We've just underwritten $1 billion in Egypt, rather, for a couple of monorails. That's a tricky jurisdiction in size. And in terms of other tricky jurisdictions, I mean, we absolutely have risk capacity for Iraq, where we've completed several transactions. So I think that, the Chinese certainly will do things large and do things in most places, but they're not the only ones.
Louis, I think there's some really fascinating things that you've pulled out there, and you've both summarised the situation very well, which is for global businesses actually, and for exporting businesses and export finance, this is just a global market. So the politics around all of this should really be left in their box, which is with the politicians. Export credit agencies have a role to play, which is to be a supporter of government policy, which is to support exports, of course. Now, what we've seen over the last few months is is a kind of diminishing risk appetite on behalf of insurance agencies, for example, in the private sector for some of those riskier jurisdictions. So that in and for itself must be creating difficulties, isn't it?
Well, from UKEF's perspective, I mean, and it's not absolutely on your point, but we've broadened our range of markets to include developed markets for credit insurance, where previously we weren't allowed to do that. And that's in order to ensure that if there were a drying up of liquidity in the credit insurance markets, the export credit agencies can address that. So I'm talking about the EU, the US, Australia, New Zealand. That said, the British government has stepped in behind the credit insurance industry, for example, to offer a first loss underwriting of a portfolio of risks that an insurer might want to put to the UK government. And so that scheme exists. And just by way of anecdote, I mean, the applications to UKEF for export credit insurance policies have increased 45% during COVID. And so certainly it's an area where we're much more focused than we have been.
It's really interesting, isn't it, Gabby? Because I mean, this is an area where SMEs are perhaps not aware that this type of support exists. So, I mean, I can speak personally on this or as a business owner on this, but I can also say generically, SMEs do have an issue of accessing finance that export credit agencies can genuinely help with by being more explicit about the types of products that they offer, for example.
Yeah, I think there's, I'll answer that question about the SMEs because it's an interesting one and it's not just a problem here in the UK. I mean, I think
absolutely, it's everywhere. It's generic.
It's everywhere. So, and actually recently I found out it was a real big problem in Germany, which surprised me, but because often Germany is kind of portrayed as here we have the solution for SMEs, but they don't. Going back to the insurance market, I was expecting Louis to say that the applications for exit cover for insurance has gone through the roof, because I think what I've seen is that the insurance market has really bunkered down. And I think there's a limitation at the moment in terms of capacity. So it's no surprise that Louis has seen, you know, 45% increase. In terms of your question for SMEs, I think SMEs, and this is not just an SME issue for the UK, I think they've got three challenges. And one is that most SMEs have great products and can easily sell overseas, but they just don't have the in-country knowledge and understanding of the processes that one would need to do a project or sell equipment in Ghana or in Latin America or wherever. So that lack of knowledge and understanding leads into you know, a fear factor. You know, exporting is tough and it does have many risks, but the SMEs don't know how to structure those risks and have those eliminated. So that there is a knowledge gap and capability gap. And I know that UKEF have been putting people in and around the UK to kind of bridge that gap, but it's still a real problem. But the third is that the banks are not interested. It's just not economical for them. You know, for the KYC, the AML, the onboarding costs for a bank to take on an SME and to undertake the due diligence of that SME's customer in the buying market is just too costly. And this, I think, is a problem for all of the developing countries. And so therefore that trade finance gap in terms of where there's a need, there's an understanding or lack of understanding, and even where the ECAs can provide the product solution, that gap is, in my opinion, is getting wider. And I don't have the solution to that. I'm just saying there's some real issues. And Louis and his team and the other export credit agencies are providing the support. They have the products and they do provide great liquidity, but often it's at the prime contractor, you know, the general export finance schemes that Louis and his team have been doing. These are to the big, you know, the Jaguar Land Rovers of this world, the Rolls Royces of this world, and through that to the supply chain. But getting SMEs to be exporters in their own right and to help them develop their business globally, that's a tough challenge at this moment in time.
It's really interesting because I mean we've we've published research this week which has talked about how SMEs have actually been really badly affected by the last 12 months. And if you look at the number of exporters, you look at the revenues, you look at their turnovers, and you look at their employees, everything, particularly micro businesses, have been very severely hit by the trends of the last 12 months. I mean, that's not really genuinely saying anything new, because we know this is an issue. But what you're highlighting is something that's been around with SME finance generically for a very long time. So, you know, back in the day, we used to talk about an equity gap for funding large, fast-growing businesses. We used to talk about, you know, that being somewhere anywhere between £200,000 a year and 2 million. Louis, is this something that you think has now transformed, because so many businesses are exposed internationally? Do you think we have the same problem now with exporting that we had with, say, venture capital access in around the dot-com boom? It's something that's just shifted to internationalization, and that scale-up businesses and fast-growing businesses ought to be looking at themselves as being exporters. Is there a cultural thing there?
So look, I think there's a complex picture here. I think that where I'd go into this sort of vicious circle is that I think that most SMEs, quite properly, don't really distinguish between one form of finance and another. It's really about cash. They don't distinguish between export finance versus an overdraft versus a secured facility. It's about cash. And so for many SMEs, I'm not sure that export credit agencies themselves are genuinely the solution. There is also a misconception when people talk about trade finance, the uninitiated, that instantly makes them think international trade, but actually so much, the vast preponderance of trade finance is about domestic trade finance. It's working capital for domestic companies. And you know, to use an export credit agency to solve the access to finance issues of the whole of your SME community is a little bit of a nut to crack a sledgehammer in a way. And so, you know, we have a range of products that are for serial exporters, really for serial exporters. We absolutely want to make those more accessible. And to Gabby's point, actually, our general export facility is not only going to be for large companies, it's going to be a part of our delegated process. So it's going to be for small companies, you know, as small as a bank will allow them to work through. But actually, it's entities like the British Business Bank in the UK that really are there to provide access, particularly to the smallest of SMEs where the private sector can't do that. And so I think that you know, focusing export finance on SMEs is not the overall solution at all. It's about just cash mainly.
It's I mean, that's also a part of the supply chain and making supply chains stump up cash more quickly, making sure that the small businesses themselves understand when they can access what type of finance as well. Yep. So it's about the appropriateness of it all. I guess I want to bring you both back to this question of strategy again, because the way I'm understanding this and the dialogue that we're having is that the ECAs actually have a very important strategic role to play. So they're sort of behind the scenes promoting the national champions, the companies that are able to export and able to drive that export agenda forward. Do you think all export agencies ought to be working with each other? I think what's really interesting about the way the conversation has gone during COVID is that we've started to talk more about national interests, and yet there's a kind of a conflict there, because all ECAs are by definition working with countries abroad, so they're multilateral and they're helping by definition infrastructure in Africa, or building dams somewhere, or supplying aerospace products or something. So there's a very difficult strategic conflict to manage there, isn't there?
Well, yes and no. I mean, I think the politics on a deal varies, where some is just purely business and some does have some government-to-government element to it as well. But I think that the export credit agencies really do collaborate quite well. We certainly have a minimum UK content policy of only 20%. And that reflects the reality of the UK industrial base, that there are many things that we don't produce, but some things that we do that we want to support. And therefore, in relation to a power station, for example, we don't make a big gas turbine, but we do a lot of instrumentation, we do valves and all sorts of other things, we do the design and engineering work. And so what we tend to do is we're willing to finance an overall project, but then we go and get reinsurance from other export credit agencies for the content that comes out of their countries as well. And that helps us to get more UK content driven into these projects in the first place. And so actually collaboration is really critical. So I think there's plenty of collaboration that goes on. The other example particularly would be around aircraft, where we finance a lot of Airbus aircraft absolutely, hand in glove with BPI France and with Euler Hermes as well.
I'm going to disagree slightly with Louis on this.
Right.
Aircraft,
we got there.
aircraft, yeah. I mean, it's actually aircraft, has been going. The process of you doing for an aircraft transaction hasn't changed in the last 20, 30 years in terms of how, and that does work. But what you said, Louis, I do agree with in terms of the general ethos in terms of what the ECAs tried to do in terms of reinsurance and collaboration. But in reality, what I'm seeing now, which I think is quite frightening, is I don't think there's a level playing field. I think that the export credit agencies have been politicized to be very aggressive in terms of supporting their domestic exporters. I do think there's a trade war coming. I do see less collaboration at the OECD level. I do see a lot of the ECAs, even those within the OECD, having their own and very wide interpretation as to how flexible they can be and where they can add value. I'm seeing at the moment some ECAs offering 100% of the contract value being financed, with the 15% being offered on commercial terms. I'm seeing others being very aggressive in terms of providing concessional financing. I'm seeing a very big push by those strong ECAs who have unlimited appetite or capability to provide direct lending at the OECD SIR rate, using that as a competitive advantage. And I'm seeing first mover advantage being used by some ECAs to say, look, if we can do this quickly, can we get this deal for us and for our domestic exporters? The flip side of this COVID crisis is that we all accept that there's going to be a negative impact in terms of world economy and GDP in for the next 12 months, 2 years possibly. But that is pushing the ECAs to be much more flexible and much more open to interpretation as to what can and can't be done under the OECD terms. So there is real competition.
So Gabby, let me draw you out on that a little bit. You said there is a trade war coming. If I read the financial press, plenty of people are talking about a trade war already being there. So is this going to get worse?
Yeah, I think it's going to get worse personally. Working with Jeff, I was working on, did an interview with Chairman Reid, and we're talking about the China policy that they have and how US Exim have 20% of their delegated country limits that can be allocated to their program. That ostensibly is there to counter China, but in reality can be used to counter anybody. The rhetoric that we've seen of, America first is being softened a little bit with Joe Biden.
Do you think?
I think it's been softened a little bit, but it's still going to be about America first, jobs in the US. And
Made in America.
Made in America.
He's still using national strategy. Economic security is national security.
So, that I can't see how he will wish to undermine that to the US electorate. And I think that will manifest into a greater push by US Exim. So I think and I think here in the UK, Lou and his team are still very flexible. They provide flexibility, I would say, in certain places that other ECAs don't. And hats off to them. I think, everyone is trying to do what they can to promote their own exporters.
I think, you know, I mean, obviously we have to tread slightly carefully, not to get each other into trouble. But I think there's something very interesting here, which is it goes back to this strategic role. I mean, UKEF has a lot of praise all the way around the world from the networks I'm in for the influence that it has and the strategic game that it plays very effectively on behalf of UK exporters. I guess what I would say, Louis, is that, you know, you answered the question very diplomatically, but you can't avoid that sort of more political dimension to it. I guess there's always going to be a slight conflict there.
Rebecca, I mean, I'm not naive enough to think that export credit agency finance isn't attractive. I mean, it is absolutely attractive. Does it represent a subsidy? Well, if you believe in the multilateral system, we've got a set of rules which say that it's not a subsidy, or if it's a subsidy, it's a permitted subsidy and it's transparent and everybody can see it. And it's an advantage that any country can have to set up an export credit agency, and so many have. And we're looking to collaborate with many of them, signed an agreement with Etihad Credit Insurance in Abu Dhabi just the other day, for example. So as I say, I'm not naive enough to think that there isn't some element of stretching the rules, there isn't some element of seeking attractive financing, nor that there isn't some political element sometimes in what even we as UKEF do. You know, we financed Typhoon jets for Qatar. And that was a deal big enough, not just for it to be outside my underwriting authority, and it was done under ministerial direction. It was clearly a political decision. So that is there. I think that nobody is denying that there are undercurrents in global trade that are really quite worrying. The WTO Director General competition going on at the moment is really airing a lot of these issues. No question, and it's choppy waters, but at the same time, most countries still would prefer a rules-based system to some degree, and it's about reshaping that, which is how we need to go forward. And that is just from the visuals sparked both of you into action. Here we go.
Go, Gabby.
You're right. I do like it when particularly strong ECAs, and I would put UKEF into that position where they say, we love the OECD rules. We follow the rules. And that's because you have the advantage of being able to do a lot of the flexibility within those rules. Remember, those rules were written at a time when within the OECD, all of the countries in the OECD from a credit counterparty risk were deemed to be the same, or relatively, I mean, there was hardly any difference. But now there's a big difference between certain countries in terms of the counterparty risk in the OECD and others at the bottom. If you're in that top stream of ECAs within the OECD, you have a competitive advantage in comparison to other ECAs in the same box. Just the boxes now got wider. So if you're at that top level with the most influence often, then you're going to play by those rules. May not want those rules to be changed because that's going to give you a competitive advantage. So I don't see a lot of pressure to change the rules because it is going to benefit certain countries over others.
I'm not sure about that, Gabby. I mean, I think there's a pretty positive view of the need to reform the OECD arrangement because, frankly, it's not that great for developing countries because, as you pointed out, if you have a very high credit rating as a country, the cost of liquidity that you're providing is much lower than for a country that has a lower credit rating, and they will pay a lot more for the liquidity, even if the premium you're charging for on a given risk is the same under OECD rules. So I totally accept that, and I think there is a kind of agreement amongst G7 countries. I think most G7 countries. Of the need to increase accessibility to the OECD arrangement and that type of arrangement for developing markets, particularly.
So this is actually about and leads us to kind of wrapping up the conversation, which has been absolutely fascinating. This is actually the really important thing, isn't it? We all need to have an idea of the multilateral framework within which trade sits. Trade is a force for good. I think we'd all agree with that. It is a force for creating jobs around the world. It is a force for creating economic development. We all need to be aware, of course, of the fact that it creates inequalities as well. And I guess this whole event is about the future of strategy. So we're looking at how trade professionals and actually strategists can start to shape the future in a more explicitly multilateral way in a world where globalization has been tarnished somewhat. So what are we going to be talking about this time next year? Is trade ever going to be restored to its place where it's seen purely as an economic good? Or do you think we have other priorities that we need to deal with right now in terms of rebuilding consensus, focusing on sustainability, focusing on economic development, and after all, getting vaccines out around the world?
I just don't think we can look at trade in isolation. Trade's an enabler for so many of those other things that you've just talked about. And so it's a kind of virtuous circle. But as with anything, which is sort of multifaceted, if you focus too much on one thing, it gets out of kilter with some of the others. And so, you know, it's an iterative process. So I think in a year's time, we will absolutely be talking about trade. We'll be talking about how trade can improve the move towards sustainable development. But we will also, I think, be talking quite a lot more about a shift in trading blocks. So the new agreement that's just come out in Asia, potentially the UK joining the CPTPP, whether there's a UK-EU trade agreement, we hope there will be. You know, all of these things, I think, will be swirling around for some time to come.
Louis, that's absolutely point well made. I mean, we are seeing these shifting landscapes, and we all are going to need elocution lessons to be able to say CTPP quickly enough and make sense. Gabby, your thoughts on all of that?
Yeah, I agree with Louis. I think that what's interesting is that the investors and the banks involved in trade are very much focused on prioritizing their efforts on projects which fit into the SDG goals. So I think trade and the bilateral trade, that ECAs will continue, as Louis was saying. I think there'll be a greater push both by the ECAs and by the banks to be involved in those projects that alleviate poverty, improve health, promote education, you know, which are more of a multilateral development objective, but I think they will start to cross over. Bit of a question mark as to what happens to the other sectors that don't fit into that. So, for example, oil and gas, aviation, in terms of mining and metals. You know, they're still important, strategically important projects for both the purchasing country as well as the exporting country. And I think that's going to be an interesting challenge for the export credit agencies and the banks to look at. But my fundamental belief in terms of where we are in 2 years' time, it's going to be a very competitive field. And I think, we run the risk of being running a race to the bottom, and I think that's not going to be helpful for everyone in this market. And I would prefer to see a lot more cooperation being evidenced within the OECD and elsewhere. Because I personally don't see it, and I speak to the Bern Union and others, and they don't see it. And so I think there's a lot more that can actually be done.
Gabby, Louis, thank you so much. That's been a real insight into the way export credit works, its politicisation, its non-politicisation, and the goals around multilateralism and sustainability and supporting SMEs and economic development as well. A real canter through the whole area. Thank you so much. That was very insightful. And I look forward to speaking to you both again soon. Thank you.
Thanks very much indeed, Rebecca. Thanks, Gabby.
Thank you.
Thank you.